Hello everyone and welcome to a new ATFX weekly market report. My name is Gonzalo Cañete. I'm here to give you a review of the whole week, how the week is ending, and also how the year is ending, because this is the last report done this week. I'm recording this 29th of December, Friday, and you're going to see this freshly on Monday on your social platforms, mainly YouTube. And I'm gonna just give you what was this week about and how we are ending this year. An amazing year. We need to record new maximums, new levels on equity on US markets. We also have seen dollar dropping. We have seen gold rising to above the levels of $20, $50 per ounce, and it seems to be stable on those levels. We have seen also oil dropping massively the last 5 weeks, regardless the tensions, geopolitical tensions on the Red Sea and the Black Sea related with Yemens and Houthis attacking all those boats who trade with Israel. The coalition called by United States, a military coalition, just to patrol all the Red Sea and protect the trade on this area. Please keep in mind those boats are basically represent 30% of the global trade volume. Now let's go to the week. Let's go to the numbers. Which numbers we have had this week? First of all, on Tuesday, we got Japanese inflation, which it was 2.7% versus 3% expected. We also got the 2 years bond in US, the 2 years bond action, which it was ending with 4.3% yield, when the expectation was ending by around 4.8%, which is, again, is better than expected. Super good results. And as you know, if you follow these reports I'm making every single week, you know already that our vision is these reactions in the fixed income, in the bonds market, and plus in the equity are well explained by the last words by Jerome Powell in Federal Reserve, when he was suggesting the idea that next year, 2024, at some point, the Federal Reserve is going to cut interest rates, which from a American economy perspective, US economy perspective, is not needed because the growth rate is super high. It's almost 5%. Which is so good. It's even better than the expectations. It's close to the numbers of China. It's growing super fast. But as we say and we explain, probably it's a decision taken as a central bank of the world, not for the United States. Federal Reserve is still the central bank of the dollar, and the world is still quoting international markets in dollar, and therefore I think Federal Reserve is assuming that role as a responsible of the monetary policies globally, worldwide, and that's why these decisions and actually twisting the markets are making a massive bull rally on US equity, and also even European equity is rising by the Federal Reserve stimulus, because Central Bank of Europe has reminded that they are not considering any interest cuts. Therefore, all the stimulus, all the push the European markets are experiencing right now is coming from the Federal Reserve. And still, there are some difference for the last week and a half on European market and US market, and I'm going to show you later on the charts. Now, Wednesday, we got also 5 years bond action on US, which it was ending with 4.4% yield on the bond, still good. Keep in mind, 2 years bond and 5 years bond US was so high month and a half ago, because dollar was getting so strong, because it still was that fear to of the Federal Reserve still increasing once again 25 basic points the interest rates. It never happened. Actually, now it's the opposite. Japan industrial production was dropping on Wednesday by minus 1.6%, and this is actually concerned because first of all, Japan is on the top 5 biggest economies in the world, and secondly, Japan is in a certain situation that they need to, at some point, review and maybe twist their monetary policies in a moment that US dollar against the yen is in a super interesting point, super high. It was correcting lately because the market was assuming that by January, Bank of Japan will probably make more tough monetary policy and reduce the monetary expansion, and still just trying to make the more tough monetary policy by reduction of liquidity, which is something that probably never happens because, as we have seen recently, even inflation in Japan has been dropping. So in every single country is dropping, but in Japan too. And therefore, if in Japan inflation is dropping, there is no pressure to the Bank of Japan to touch the interest rate or increase the interest rate, which is what the market was afraid of for the last 3 months. Now, Thursday, we got all data coming from the United States, initial job claims. I will give you the results in a minute. But it was higher than expected. It was 218,000, sorry, versus 210,000 expected. But still below the average, which is around 250,000 job claims. And it means like the labor market is still in US is strong. So therefore, once again, Federal Reserve has no reasons to cut interest rates unless it is to give a chance for the world, because they are predicting probably a recession, global recession coming from Europe mainly, which is officially in recession. Check the numbers. And secondary by China, which is showing certain symptoms twice this year of potential deflation. Now, pending home sales and crude oil inventories. Crude oil inventories actually, I'm going to show you the results now, but it was actually dropping to a certain levels. It was minus 7 million when the expectation was actually minus 2 point something. So it means like the balance again is going to negative. And still with that super negative balance in the inventories of oil for US, which means obviously that the increase of demand and needs on oil should be high. Still, oil price is not reacting. This is the report I publish every single morning. You get here daily macro market update on market snacks. And in this one, I was using, just mentioned, crude oil inventories turned negative again, declining for more than 7 million barrels against the expected 2.4 million barrels. Nevertheless, crude oil prices remain unresponsive and continue to fall around $72 per barrel on West Texas Index. We also got inflation dropping in the case of Spain, lower than expected. We also got in China the 14 5-year plan, which is the report that the Communist Party is doing, planning the economy in advance and so on. And it says, it was introduced yesterday in the parliament, and it says the states that Beijing will increase domestic demands, guarantee a swift economic recovery, and encourage steady growth. Additionally, analysts anticipate that the reserve requirements ratio and key lending rates may be lower by 2024. They follow the strategy of Federal Reserve: decrease the interest rates, cut interest rates, and also reduce the reserve requirements, which basically means increase the leverage of the banks. What else? Unfortunately, the worst returns generated by equity was coming from China. We got the index from Shanghai and the one from Hong Kong, Hang Seng, both of them dropping. The first one by 3.6%, the second one by 13.5%, respectively. So Hong Kong and Chinese mainland equity indices saw the largest percent losses among the world major index this year. So the worst results on the main major index. UK national house price fell 1.8%. Russia, however, this actually was shocking news. It was proving that the PMI from Russia is actually 53.8% in November. Rise from 53% in November to 54.6%, which obviously means an expansion at the quickest rate since January 2017, and the result of ongoing improvements in the output and increase in new orders. The pace of job growth accelerated to the highest level in 3 months. Purchase activity increased at the second fastest rate since August 2006. So regardless of the sanctions applied to Russia, the economy of Russia seems to be quite faster and stronger than European economy, which is in recession right now. So unfortunately, it didn't work. Oil industry first year losses in 2020 as OPEC production cuts and geopolitical tensions failed to push prices higher. So we got that announcement from OPEC trying to reduce the production of oil, which I remind you that we mentioned in this report also. It was expected to be a cut of 2 million barrels per day, and it was after all 900,000, which is even less than half of what was expected. So West Texas, as you can see now on the charts, is still dropping. You can also see a kind of shoulder-head-shoulder pattern here, pointing super low the targets on this asset. And therefore, I think we may face levels of $68 per barrel, even $65 per barrel, worst scenario, but it's still a strong base on those levels, a strong supports. So could be interesting long positions taking in those levels. Let's keep an eye on that for the coming days, but it seems to be a market that you don't want to touch right now. And some of those ones who like take more risk, maybe looking for short positions. Let's go to gold because, as I mentioned, dollar has been dropping. You got on the chart right now in dollar index, still trying to recover but dropping. The minimum registry yesterday, it was actually 100 points, 100.61 points. So it's also dropping to 100 points, which is super weak, the weakest movements of the year. An exception on summer, where it was partially for a few days below those levels. But it definitely means like the direction of the market has changed. The dollar is getting weaker and weaker, and therefore, let's take a look on gold. Gold seems to be strong and remain about $2,050 per ounce, as you can see on the chart. So therefore, I will say that gold is stable here. It seems to be stable. As far as the dollar is weak, gold gonna play the game here in this area. But still, we are in maximum, so keep an eye on this because it doesn't seem that it's inviting you to take long or short positions because you are right now in a kind of frontier or resistance, and everything could happen now the coming days. All right. Euro dollar has been rising, obviously, because dollar was weak. So we have even seen the euro dollar yesterday about the 1.11 dollars per euro, which is incredible. The maximum was actually 1.1140. Now it's 1.1050. So it's just taking some steps back. But as you can see, there is also certain base or supports in the area of 10950, more or less. So again, interesting the movement of the market, but still everything could change. Dollar has been dropping for 5 weeks, so it means like for any reason dollar is using 100 points, the XY index has a support. This could just start to drop again, and gold could start to get cold again and drop in price too. All right. Now going to equity, you got SP 500 future making what it seems to be more or less a kind of resistance. We have seen that it's facing and testing the maximums registry on January 2022. And since then, we are playing in that area. More or less, it's the 4,800 points on SP 500. If we take a look on NASDAQ spot, we will see that it's also trying to conquer 17,000. Right now, it's quoting at 16,816 points. And we have been super close to those 17,000 because we have been in areas with maximums of 17,977, top maximum yesterday. So super positive and optimistic markets, as you can see. In Europe, just to review also Europe, things seems to be a little bit different. Let's go to 4 hours candle, so you will see a more harmonic pattern here. But as you can see, it's making a clear resistance, and since last week, Wednesday, that was Thursday season, it was dropping from maximums, which it was almost 17,000. The maximum was actually registered on 17,003 points. Since then has been dropping, but keeping a kind of lateral movement between, I will say, 16,700 or 620 to 16,800. So it's a kind of range of 200 points, moving up and down since then, and eventually moving close to the 200 moving average, which will be in a round of 6,400 if the market drops after, I insist, 5 weeks of optimistic market rising constantly. Therefore, do not be surprised if the market twists at some point and start to correct. For example, anything could trigger those events. Anything could be a black swan. Few hours ago, I also published on my social networks. You got the comments done on X, on my profile on X, at Gonzalo Canete on X. Few hours ago, it was just an announcement from a kind of emergency meeting of the government of Poland, because Poland apparently detected an object, an unknown object coming from Ukraine crossing the airspace, and they suspect could be Russia. So they suspect could be a Russian object, even a missile, which is what they're trying to suggest. And if it's a missile, a Russian missile crossing a NATO aerospace could be considered kind of aggression and so on, blah, blah, blah. And again, my friends, we got another topic, spicy topic on news. And therefore, the markets will drop, and the reason will be this. So keep an eye on the news, and just do not get surprised if you see that the market is dropping at some point in the coming days. It will be completely natural, just as a natural correction of the movement we have seen the last 5 weeks. Okay. Happy New Year and take care. See you in the coming reports next year, 2024. Thank you for following. And remember, if you are not subscribed, please subscribe the channel and give me a thumb up to know that you are there and you like it. And as I always say, if you want to contact me because you want to request any particular topic you would like I speak about you can just send me an email through that address. I also got a newsletter. I can add you my newsletter completely for free. And you will receive every morning an email with fresh news about market. Okay, thank you so much. Take care and Happy New Year again. Bye bye.